What does zone to zone trading means? It means that when price is moving, there are levels which are more important than others. Not every single price level is the same. There are levels where the data or the information released to you is more important. We'll see it in action right now. First thing to remember is a price level that's important on a higher time frame is going to be also important on a lower time frame. It's actually even more important on a lower time frame. So a price level that's important on a weekly time frame, it is very important on an hourly time frame. So that's why when we start this analysis, we always start on the weekly chart and then we go lower. The system you're going to use to trade on the hourly, you can use it for day trading. You can use it for short-term swing trading. That's how I use it. I trade futures with it. You can also use it for short-term options, calls or puts. It works well for indices, almost all of them. You can also use it for stocks. I'll show you how later. All right, so without further ado, let's begin. So what do I mean by an important price level? An important price level is one where some information is revealed to you, where if the price is below it, the path of least resistance is lower, and if the price goes above that level, the path of least resistance is higher. Let's see some examples. Let's start with this one. This looks like an important level. 293. So if you ask me, why is this an important level to me? I'll show you something. Acted as a resistance, price spent quite a few weeks underneath it, basing, and then it went lower. When the price came back up again acted as a resistance, price went lower. Once it was able to cross that price, it based around it, mostly higher at this point, and then the market went higher. Below this level, the path of least resistance is lower. Above this level, it's higher. All right. Can you see this? From 14 October, that's when the big rally began. Above this level. All right. Below this level, once the price stayed there, it started to go lower again. So let's define some more levels and then check it out. All right. Let's see where the price bounced from here in December 2018. Okay, it bounced from around 238 level. Now see how important this level was. Price in 2017 in February based up below this. Once it crossed it, it consolidated above it for quite a few weeks, retested it around August before this major rally happened. So you see, you could have defined this level in 2017, and then when the market was crashing in 2018 and people would be scared, you knew that unless the price went below this level, the path of least resistance is higher from here. Unless this level gets broken, we don't have to be bearish anymore. Some other important levels on the weekly. This one, for example, the bear market of 2020, where does it bounce from? It bounces from a level that was set back in 2016. Look how long the price spent consolidating underneath it. Once it went higher, the price started to go higher. So this level would have become very important. We could have marked it in 2016, and in 2020, that was the level where it bounced from. You see, history is a good prediction for how the markets will behave for helping our decision making in the future. But one limitation of this strategy is it only works in areas where you have some price history. For example, right now, we are at all-time high territory. We don't know how the price will respond around 480. We have no idea. We have no data to base that upon. There's other strategies I use for it to give you some levels, which I do in micro tactics. That's a lesson for another day. It's a bit more complicated. It's not as useful right now because most of the times you will be trading in environments where you have some price history. All right, let's mark a couple more weekly levels and then we'll move down to the daily. 320 seems important. You can see in September last year, in September, when the price was going lower, it bounced back from here, retested again at the end of October, and price went higher. Below this level, path of least resistance lower. You see, this was the level that the break happened in February 2020, which started this huge drop. This was the level that had been the support all throughout January. And once this level got broken, that's it. We started the downfall. Other levels, let's see. 353 is important. Another one that's important on the weekly, which might come into play real soon, would be around 403. And then the other one on the weekly, which is important right now, which could come into play real soon, should be around 423. Now that we have marked some important levels on the weekly, we'll move to the daily. But I hope you get an idea of what I'm talking about. If you have any questions, obviously discuss it in the chat, throw it out, because this is the first time you might be getting introduced to this concept. It's very useful. If you have any questions, clarify them. Also, guys, this is my first video lesson. So if there are things that you would like different, suggestions you have to make me better, please let me know in the chat. I would be more than happy to incorporate your suggestions and make the quality and the flow better for the future. All right, let's continue to the daily. In the daily, let's try to focus on levels that might be near term, that would be useful. So you have an idea of what to expect from the market going forward. Always, you can mark your own levels in the future as we get more price data. It's a constant process. Let me define some levels here, and obviously we'll discuss them, why they're important. Like this, for example. Let's change the color for the daily ones to red. I looked at this level, 386. Why is this one important? Look at this. Acted as the resistance, price went lower. Once the price went higher, acted as the support. Throughout February, it acted as the support. Once the price broke below, again, we went back to the next level, 371, which was a weekly level, so it was a very important one. Price went higher, retested it, and then boom, higher. So above this, the path of least resistance, higher. Below this, the path of least resistance, lower. Yes, there can be some chop around the level sometimes. That's fine, that happens. No strategy is 100% perfect. But what these levels help us do is help us define what's a high probability scenario and base our market decisions based on that. Let's define some more levels for the daily charts. Let's say some near-term ones. This one, for example, 435, 436, important. Acted as a resistance, price went lower. Once price went higher, acted as the support in July. Right now was also the support when the price dropped a week and a half ago, and then boom, higher. This 412 level, price spent a lot of time around this. Let me mark it, and I will show you. 412, yeah. Once the price broke below it, it went to the next level of support. The path of least resistance was lower. Price actually came back to retest it, and then it went higher. Another one, this one, for example, 362. You can see price went to the level, went below. Was also the area where a huge market gap up went lower. Once the price crossed it, the path of least resistance was higher, acted as support when the price came back, acted as support, and boom, we are higher. So now you have an idea of what these levels look like. We are going to move to the hourly charts and see how to take advantage of them for our day trading, for short-term swing trading. Think of like 1 or 2 days trades, nothing bigger, nothing longer. The price daily levels are less important than the weekly levels. So the levels we mark on the hourly, for example, will be less important than both daily and the weekly. All right, let's mark the hourly levels for things that might come into play real soon. 442. Let's change the color to blue for the hourly levels. So 442 seems to be one, might be 442.5. Yes. Let's mark some more. Okay, 446. This one might actually be of daily importance. Let's go back to the daily charts and I will show you why. I should have marked the daily levels first. Okay, you will see that after a brief period higher, this level. You see, it acted as a resistance on a small term bounce, and now it has acted as support. Yes, price went higher briefly, but this level was tested a lot more than the other one. So this one is of daily importance. So I will mark it as red. Let's go back to the hourly. This is the level I've been talking about, that if it breaks below, the path of least resistance will be lower, back to 436. This one seems to be 441. Let's mark it as blue and we will discuss why. 26 July acted as resistance. Price went lower. Again, acted as a resistance around 29 July, acted as a resistance on 2nd of August, 3rd of August, and once the price went higher above this, on the 6th of August, acted as a support and path of least resistance was higher. Same thing for this one, 442.51. Acted as resistance for a bit, price spent some time basing. Once higher, it acted as support. Retested here, retested here. This whole area, 440 to 442, there are a couple different levels. That's why it's a bit tricky trading. I had mentioned it in micro tactics. Usually the levels are a bit farther apart, but it can happen. No big deal. All right, so now you have an idea of how to mark up these levels. Let's see how you would trade them. I use them for trading, mostly trade them through futures. As I mentioned before, you can trade them through options, puts, calls, quick trades. This is a more active trading style. You can use the same pattern for lower time frame, 5 minutes, 15 minutes. I usually don't do that because I don't want to spend my whole day in front of a screen. If I have hourly levels, I give myself some relief, some time to trade these things. If I'm out for a coffee with friends, I can still look at these levels and make a decision on my phone. With 5 minutes, 15 minutes candles, you can't really do that. So one way you can trade this, and which is how I started, but I've tweaked it a bit now. I will explain how. But the way I started is when the price would be at a resistance, I would wait for a formation, for a pattern. Like in this case, you see on the 5th of August, once the price came to the resistance, there was a small box. And spent about 6 hours making a box. And then the box broke higher. So I would have gone long. If the box would break lower, I would have gone short. But sometimes you might not see a pattern. Like here, for example, you have a descending triangle. You can take a break up of it. Here you have an ascending triangle on the 3rd of August. You can take a break below it. You can trade that way. You will take a lot more trades. The only problem with that is there's a real risk of over trading. It's harder to define your risk. What I made the switch to, after spending a couple months trading like this, I realized I was over trading and I made a switch to only trade with the trend. I will give you some examples of it. All right, let's look at this. On 18th of August, we know our level is around 442.6. We could have drawn that level up from the action on the 6th of August, from historical price action. Okay, you see, on the 12th of August, it was supported there. It was supported there on the 16th of August. So that's an important level. So what I would do when the price breaks below this level, around 442.5, is I would short. Why would I short? The price is coming from a higher place and it broke below a support. So the most likely path is to go to the next support, which is around 441. That would give me a 15-point trade on the ES. If you're trading 2 contracts, that's $1,500. Quick, easy. Because the path is coming from a higher place and then this 441 support gets broken, I would have shorted again, taken it to the next level, which was a daily level, so it's an important one, 435.68. That's where I took my profits on the morning of 19th August. Once the price has reached a level, I would take my profits. So like in this case, from 442.5, I would take my profits around 441. When the price breaks lower again, I would short, take my profits around this, 436, and wait. If the price broke below 436, I would short again. But what happened was the price started bouncing. Once the price started bouncing, I'm not gonna long this trade. Why? Because the price was coming lower, and now the bounce is happening from this level, which is against what the original direction was. What I will do is I will wait. I will wait to see how the next resistance acts. At this next resistance, see, price was coming higher from 436. At this next resistance, it waits for a bit and then it breaks higher. Once it breaks higher, I will go long. I will take some profits at this level, see how the price reacts. If it breaks higher, will I take a long. I will not take a short at this level because the price was coming up. So I don't want to go against the price. I don't want to go against the trend. What this will do is save you from overtrading. It will help you take easy trades where you can be confident and your risk can be limited, because once, let's say for this long trade above this resistance, I can just put a stop right below this level and be done. I don't have to wait around and see if the price can come back below or something. So I like to take trades only in the direction of the price. So again, above 442.51, take a long. Next level, 446, right? So what I would do, I will not take a shot there. I will wait. I will take my profits around here. And if the price breaks above 446, which it did, I would take a long. So you can see 446 again, it was supported here. But I did not take a long here. Why? Because the price was coming from a higher place. I mentioned it in futures plays that if the price breaks below the support of 446, I will take a shot. So this technique of only trading with the trend, the direction in which the price has previously been going, has helped me a lot, because I don't put myself in any confusing situations. I trade less and I make more profit. So you guys feel free to use that if you want. If you want, you can always use the other one, shorter resistance, longer support, have tight stops, and you will make a lot of money. I think that's about it for zone to zone trading. This is a very helpful method. And yeah, the system has been really profitable. If you have any questions, feel free to ask in chat. Start a discussion there. I will be more than happy to help. And if you have any suggestions for how to make my video quality better, if I should slow down my speaking, anything, let me know. Let's see an example of this in stocks and finish this video. Let's take a stock like Zoom. It doesn't matter. For any stock that trends, this method works. For stocks like retirement stocks or dividend paying stocks that chop a lot, this method is a bit more tricky. I don't like to use it for those ones. Sure, we can use 350 level, or we can make another one. All right, let's see, 446.28. This level was important. How? The price went above this. First things first, you can see the price acted as a resistance at this level once. Once the price went above this, it acted as a support. This is where it bounced from. And once the price went below it, path of least resistance was lower. Now the same level was tested in November, acted as the resistance. Once the price went higher, the price was above the level, it went higher. So you can see there was some history at this price level in November 2020 before October 2020. So when Zoom was bouncing in February, you knew this level would be of importance. Unless the price goes above this level, we cannot be sure that Zoom would go higher. As long as the price is below this level, the path of least resistance is lower, which is exactly what happened. The other level of importance was 350. In September, after its earnings, that's where price came to, and then it bounced higher. Okay. The next time the price tested again, yes, spent some time chopping around it, but once the price was above this level, it went higher, came back, retested, higher. So when this price was going lower, when the retest happened around 350, unless the price falls below this level, the path of least resistance is higher, which is what happened. Once the price went below this level, the path of least resistance was lower. The price came, retested this level, lower again, and came back and retested, went a bit lower, consolidated here, then broke above. Once the price breaks above, the path of least resistance is higher, which is what happened. Came back, acted as support, higher. Broke below, now it's acting as a resistance. The path of least resistance, as long as Zoom is below 350, is lower. So you can use the same technique for stocks. Obviously, I use it more for indices, but I keep an eye for important levels on stocks on the daily and the weekly charts. Yeah, that's about it. That's all there is to the strategy. Any questions, hit me up, and good luck.